Okay, cool. Hi, David. Thank you for joining us. Today we're just going to kind of dive into Griffin, what it is, and how you started it. So, very quickly, if you can briefly just start off by telling us what is Griffin.
Griffin is a bank for fintechs and platforms. So we work with companies that use software to move money around, whether that is for themselves or on behalf of their customers as part of a financial services product. And because of the way the whole financial system is designed, at the end of the day, cash gets held by banks, and we are that low level cash layer that enables them to move money around programmatically.
Okay, cool. And how did this idea to start Griffin come about? What was your background? What led you to it?
So I worked for an early quote unquote banking as a service business called Standard Treasury, which stumbled onto this somewhat by accident. They had initially built a platform for corporates to manage their own treasury, which right now seems like a pretty good idea. But in 2013, 2014, when interest rates were zero, and it was like, oh, you can buy a bond that yields 1 or 2%, not a super high priority. And so having not found a lot of market demand for that, they ended up looking at the banking relationships that they had built, what customers were telling them they actually wanted. And it was like, okay, cool. Kind of adjacent to this is programmatic management of account and payment infrastructure. Um, and here they stumbled upon a real market with the ability to deliver real value for both parties. So, there were customers that wanted API access to accounts and payments. There was a value proposition for banks, which was like, we'll distribute account and payment infrastructure for you, and you'll be able to acquire deposits. Um, but they got the commercial model wrong. And so the business model that they were operating under was, we will charge the bank like couple $100,000 a month, and in return, we'll distribute these products for them. And so you can think about this as transferring commercial risk to the bank, and the bank retains the upside. But the problem was that the banks weren't willing to take on that commercial risk to begin with, because most of them were convinced that there was no market for API-based banking. And any market that did exist would be limited to a small number of rinky-dink Silicon Valley startups. This, of course, is ironic now that the S&P 500 is completely dominated by rinky-dink Silicon Valley startups. But at the time, that was how they thought. Um, and so the founders of that business, Dan and Zach, kind of looked at this and war gamed it out. And they were like, look, even if we're successful and we do believe in this market, we're not going to capture the margin. The bank is going to capture the bulk of the value here. And so, and these banks are completely unconvinced of the opportunity. So we're kind of stuck, right? And so maybe the thing for us to do is to go and become a bank ourselves. The problem you then have is that becoming a bank is somewhere between impossible and very expensive. And in the US, it skews more towards very expensive. So you can go and buy a bank, but you need at least 100 million really to do it. And you can't really start a bank. At that time, there had been basically 3 new banks in the last decade, and they were really targeted to underserved communities. I think one of them was specifically targeting the Amish community, for instance. And so if you didn't have that kind of specific pitch, there was just no way you were going to get through. So they started looking abroad at where could we build a bank somewhere outside of the U.S. And this was right after the Bank of England had announced the sort of new bank startup unit, and Monzo and Starling and Tandem and Atom had all raised money and said, we're going to build a new bank. But none of them had actually gotten authorized yet. And so when we went to try and raise money to go after this, our US investors, not unreasonably, were like, you guys must be nuts. You don't know anything about the UK. We don't know anything about the UK. None of these new banks have a license, and there's no actual indication that they're going to get one. And so, oh, and finally, by the way, like none of you have actually run a fucking bank before, right? Literally none of you are bankers. You're all like, we trust you to build APIs for banks, but like to actually be a bank, no. Um, so that led to the company sort of failing and being acquired by Silicon Valley Bank. After which I went to Airbnb. And I didn't work on payments at Airbnb. I worked on development infrastructure. But what I saw within Airbnb was like a quarter of the company was working on payments. And I was like, this is a lot of people. Um, and there's like a multi-billion-dollar payments company inside this multi-billion-dollar travel company. There's clearly like I hadn't considered a company like Airbnb as being in scope for this thing that we had been building, but actually, like, if anything, this just like further validates the size of the market. The downside was I didn't really like working there. So, I mean, Brian Chesky is an amazing CEO. It's an amazing company. It may be one of the best product companies, of the last 2 decades. But I personally was not having a very good time. And in late 2016, you had the kind of wave of challenger banks getting their license. And I happened to be visiting my grandparents who lived in Bristol at the time. So I literally like read on the newspaper, like Monzo gets, bank license. And I was like, all right, like Google Tom Bloomfield. And like, this guy is like a YC founder, previous Go. I was like, this guy's a nerd. You know what I mean? Like, like if the Bank of England's willing to give Tom a license, like he and I don't look that different. Like, I can probably get a license. Another way of thinking about it, right, is like, what do you want to spend your life doing? I like building tools for developers. So an API oriented company is a good thing. I like making money. I would like to get rich. And of all the possible things that are interesting for me to do, that will most of those will not make me rich. And so this is at that interesting intersection of it's interesting. I think it can make me rich. And it happens that at that particular point in time, I had like a couple insights into what the future would look like and how to execute against it that I was pretty confident that very, very few other people had. And that's a pretty good combination, I think.
Did it
Yeah.
ever occur to you, David, at this point, I mean, to go for an EMI license and do what we've
Oh, yeah.
seen happen? Yeah. Okay.
Oh, yeah.
Mm-hmm.
It was very, very not interesting to me, but we got pushed by a lot of people to do that. And the reason we chose not to do it was twofold. First of all, it wasn't the thing that we were trying to build. Like, the thing that we were trying to build was always about banking fintechs and platforms. And yes, there are lots of unregulated fintechs, but most of them are regulated, at least in Europe. And so if you want to bank them and kind of provide infrastructure for them, you want to be an actual bank, because then you don't have the graduation risk that you have if those unregulated firms go and become banks themselves. But the larger thing was, we looked at then Rails Bank, now Railser, and we said, like, well, sorry, you guys want us to raise less money, go and become an EMI, and then we will be a objectively worse company than this other one, because they have like a 7-year head start on us. Like, what are we going to deliver against what they've built, right? That's better. And so actually, like, this argument was predominantly made by investors, right? So like, you investor, like, think that this is a compelling argument because we can do this having raised considerably less money. The counterfactual is actually this will go to zero. And the reason it will go to zero is because we will invest 2 years of our lives building this. We will have an inferior product. We will struggle in the market. And then, like, the only way that we kind of upgrade that to the thing that we actually want to build will be to raise more money, which we won't be able to do because investors will look at us and they'll go, well, you've built a shittier version of what these other guys have, right? And so we're like, well, we'd rather just not do that and go and do the super hard thing that actually, like, is differentiated. And that was not a compelling pitch for most people, turns out. We pitched basically everybody. Everyone said no. And it took us like 2 years to do. And so towards the end of that, like people were saying no because they were like the answer is no because you've been raising for too long, right? Like the fact that you haven't raised yet is itself a reason for us not to back you. And as the like saying goes, right? Like you just need one person to say yes. And the one person who said yes was Paul Forster. It was the co-founder of Indeed. And I heard about this secondhand because he went to lunch with our then COO. I think that was right. And he was like, I think this was before Rupert had agreed to join us as COO. But they went to lunch. They were talking, and Rupert, who was our first COO, both had a strong banking background, but also had been working on building a payments business for maybe a year or so as a side project, and had stumbled into the problem that Griffin exists to solve, which is like he could not find a bank to take them on. So he's having lunch with Paul, and Paul says, I think I might have to back these guys because I just feel like they're just going to run through brick walls. Like I just feel like they're never going to give up. We're still around, so clearly, and not for a lack of like having to deal with some pretty hard challenges along the way. So
how long ago was that? That's years ago, right?
Yeah, that was like summer of 2019.
Right.
Well, so like 5 years.
Yeah.
6 now, nearly.
Yeah. So one, by the way, one lesson I would give to potential founders in the future. This is really stupid, but VCs are terrible people. Is do not incorporate until you have like a term sheet, because the fact that we incorporated shortly after moving over and then didn't raise money for a long time, people were like, "Oh, you were founded in 2017, but like you didn't do any, like you know what I mean? Like you didn't do anything for like years, so like you've got no traction." It's like, I didn't have any fucking money, dude. Like. Sorry, I remember being told before this that I was not supposed to swear, or that my swears were going to be edited out. So anyway, yeah.
It's uncut. We're meant to be honest.
Yeah.
We'll see.
Yeah.
But it's also, that's a really good point, because also in the UK, at least some of the tax schemes kick in as soon as you're incorporated.
Interesting. Yeah, that was another thing that actually killed us, was because we knew that we were building a bank. We were never SCIS or EIS eligible.
Right.
And so we just like, we not only could we not raise money from like not only did we struggle to raise money from smaller angel investors, but we also struggled to raise money from institutions that sort of fell in scope. So the Enterprise Capital Fund, I think, had the same restrictions that EIS and SEIS had. And so we had like a term sheet from ADV, Accelerated Digital Ventures, in the fall of 2019 for $2.5 million. And they ended up not being able to execute on it because they legally couldn't invest in us, it turned out. And like at the time they started, they were like, we're pretty sure we can figure this out. And then like after 2 months, they were like, we can't figure this out, and we're really sorry about this, but like we have to pull the term sheet.
That's awful.
Yeah.
Yeah.
In those initial 2 years when you were trying to raise, what was what was the feedback you were hearing from investors? Was it just that people thought you should be pushing for an EMI license? Did people not think that a banking license was in Griffin's future?
So Shanza, you apparently have missed the opportunity to read one of my favorite things that I've ever written, which is a blog post that I published at the start of last year called "Why I Won't Invest." And it is a list of all the reasons people told us that they would not invest in us in 2019. I'm going to preface this by saying by far the most common reason was there's no market for this, which they were completely fucking wrong about. But the true problem was, I don't know how to size this market, right? Like, I don't know how to size this market, and I don't know how valuable it is. And the problem with that is, It's just not visible, right? Like no, no normal person walks around thinking about how a clearing bank works. They don't think about what what the commercial terms between a fintech and a clearing bank are. Like it's just totally like dark market, right? Not only do you not know, as soon as it's put in front of you, you can't Google and find out, right? There's no information about this that's public at all, and so it made anyone who wasn't familiar with this really struggle to get up to speed with it. Would you like me to skim through my blog post?
Go for it.
I can
include it in the captions as well. Yeah, go for it. Yeah.
I can pick out. Yeah, I mean, so it's too early is like the general one, which of course is like ridiculous when you're getting that from like a seed fund, because like what even is the fucking point?
That's what they're there for.
Literally, right? And for what it's worth, it's too early can mean literally anything from like we don't invest at seed to like, oh, sorry, we're too busy watching Game of Thrones. Like the sound of someone ghosting us is probably like also that would be maybe the second most common like thing. It's just like, and then we never heard from them again. There was quite a bit of Brexit. There was the market is too small. The market is huge, but only if you expand to the US, and we don't think you can expand to the US. The market is huge and has experienced massive growth, but there aren't going to be any more big fintechs, so there's no more growth to be had here. The market has long-term commodity pricing dynamics, so there's no profit. Your customers are too small, and most of them will fail. You won't get a bank license. Your team doesn't have enough people with banking experience. We think the product is too simple. We think you will not be able to build this product. We think it will take you too long to build this product. We see strategic value here. We just want to wait until we can engage commercially from a strategic investor. That one makes the most amount of sense. Like we still see that. We see strategic value here, and we think this would be a good investment, but we're only investing in AI and blockchain companies right now. Bang. But by the way, this is in 2019, 2018. So pre-LLM, I would wager that those AI investments did not work out. You're not raising enough capital now. You need way more. You're raising too much capital now. You should do a smaller version of what you're doing. You will have to raise a lot of capital in the future, and we're not sure you will be able to. You will have to raise a lot of capital in the future, and that will dilute our ownership stake, probably an actually fair concern. Although at that point, they still would have seen a very significant share price lift. We're not comfortable investing unless you as founders invest vastly more money than we actually had. It's taken you too long to raise this money. You should raise with an ICO. We're too small of a fund for this. We're too big of a fund for this. We only invest after revenue product market fit. This is from a seed fund, again. You don't know how to sell this. We'd like to see an explosive sales pipeline. We don't invest in the UK, in the EU, outside of the US. I've already talked about EIS. You have too many competitors. The biggest firms in your space aren't doing this. Therefore, it's not worth doing. These businesses aren't fundable. Your competitors are too well funded. You can see a trend here, right? We don't understand what differentiates you from your competitors. Your competitors are executing badly now, but they will execute better in the future. A summary of the efficient markets hypothesis, where someone said, the fact that Barclays isn't doing this means that it's not valuable. And I was like, dude, you're a partner at a venture capital fund. If you genuinely believe that, you are like in the wrong industry.
That's insane.
Yeah.
That guy runs like a multi-billion fund. So wow. Insane. You don't. The solution is derivative. This person, amazingly, the person who said that came back to me a year later and asked for a reference for like to another fintech, and I didn't reply to her email, but I was just like, do you not realize how immensely offensive what you said was? You don't have a competitive moat. We have a competitive investment in competitor. We have a competitive investment in not a competitive firm. We don't have the expertise to evaluate you. This is out of scope for us, which is from a fintech fund. And we don't have conviction about what the future of the space is.
Since then, since all of those no's, you've raised how much?
50 million pounds.
50 million. You've got a banking license.
Mm-hmm.
And dozens of customers.
Customers, 60% month-on-month growth. Seems somehow. I mean, look, it's it is interesting though, because this is with the exception of, some of these people who clearly are pricks. At the end of the day, like I do have a model for the world when it comes to investors, which is like, they are very time constrained people. If you're a seed fund, you have to look at least 1,000 companies a year, right? And I'm like one of the 1,000. And of the 1,000, you're going to invest in, again, it depends on your fund structure, but let's say 10 to 20, right? Maybe. Let's say 10. So, you got to say no to like 99% of the stuff that comes across your desk. And you don't have time to even take a closer look at 90% of the stuff that comes across your desk, right? And so, of course, your reasons for passing are not always going to be reasonable or fair or correct. You just don't have time. What's been interesting is that for the firms and the people who we've had relationships with for a long period of time now, even where they still haven't invested, there's like a almost begrudging respect. Like I caught up with someone at a like Series A, Series B fund, who has passed on our most recent round, which still hurts me. But he was like, look, you've done everything that you said you would do that everyone was convinced you couldn't do. So like, well done.
It's what Paul saw right at the beginning about running through all of those brick walls.
Yeah, basically.
Yeah, it's pretty impressive.
So, when you were going through all of this, like these 2 years when funding and raising was so hard, what kept you and Alan going?
Partly it was a very, very, very deep conviction that what we were doing was still valuable. And it, in that period we were fundraising, but we were also talking to the market, right? We were talking to potential customers, learning, trying to iterate on like the theory of what we were building. And it was very, very clear that there was like a real value to this. And so, we've always said like, we're not here to build the company that investors want us to build. We're here to build like the company that our customers want, right? That our customers need. And that it was very clear that there was a thing there. But also I think, like we had to be kind of scrappy. And so, Alan would need to go and take contracting jobs to pay for life, right? And it was helpful that some of those contracting jobs were really relevant, right? So he did a bunch of contracting with Funding Circle and like, was doing a lot of stress testing on their core ledger. Super relevant experience. I had to have a chat with my wife because her mom had passed away in maybe a year or so after we started the company, and she was taking a bit of time off work. And I was like, I know that you're taking a break, but I need you to go and get a job. And I need it to pay as much as it possibly can because we are out of savings. And she was like, okay. And so, yeah, that was how we managed.
I mean, that's a really interesting part. Sorry. I think it's just a really interesting part of it that isn't always visible to people is, the sacrifices behind the success and that it's not just you and Alan, it's also your wife and Alan's family and all of the people around you.
And in many ways, actually, that was the catalyst for the seed round. So right after we agreed to start, maybe like within a couple months, Alan let me know that he and Anna were trying for their first kid. That ended up being twins. And then she was pregnant again in the spring of 2019 with their third child. And they were living in Alan's home in Austin. And they were like, this house is not big enough for 3 kids. So one of two things is going to have to happen. We're going to have to sell this house and buy a new one in Texas, or we're going to have to move to the UK. So which is it? I'm not going to say that Alan's wife gave like an ultimatum, but it kind of was like, look, like, I'm sorry, like there's no more fucking around here. Right. And so in many ways, a little bit of time pressure can sometimes make a deal happen. And so I gave Paul a ring and I was like, look, man, I appreciate this is like not really your concern, but like we've kind of been dancing around this for a while. You've kind of committed a little under $1 million into this kind of round. Here's what the situation is. I need you to put in another 500K, and I need you to trigger a first close. Otherwise, like, this whole thing is kind of fucked. And he was like, okay, I'm going to need like a day or two to think about that. I was like, fair. And then, yeah, he came back and he was like, yeah, all right, I'm in.
Yeah, I mean, thank you for sharing. Mo was right. We don't really hear about the other side of things as often, but it's really insightful to see everything that you guys had to go through to make Griffin what it is today. So on a different note, in these last 8 years, so 2017 since Griffin was incorporated, what do you
Can I
think?
add, sorry,
Yeah,
one
go ahead.
more. So one of the other things that kept me going was Airbnb. And it was specifically thinking about the fact that Airbnb spent the first, the first 3 years, definitely, and almost the first 5 years, like, toiling in obscurity. But the first 3 years, definitely, right? And like, the part of the Airbnb mythos, right, is like them designing cereal boxes and selling cereal boxes after the presidential conventions as a way of like literally making rent while they built the business. And today it's $100 billion company, but they went through a lot of shit in the first couple of years, and it was not obvious to people that it was going to be valuable. And I'm not saying, like, there are a lot of people who go through a lot of shit and their idea sucks and it's never going to be valuable, right? But the fact that like I had that like real personal connection to that company and to that narrative is like, you know what? It's okay for there to be like a serious training montage on this. Like, that is okay. I think VCs often like to see just like it's explosive success like right out of the gate, and it's like, yeah, maybe, but like not always. Definitely not always.
Yeah, I think always when you're doing something that's a bit different, that's a bit new, or just something that sounds scary to people, you're gonna have people that don't believe in it, right? You're gonna have people that are a bit hesitant to kind of jump in.
But
Uh,
like you can also like you can be on the outside for a long time,
yeah,
and you kind of have to be willing to be on the outside for a long time.
yeah. But I think one of the great things, at least about Griffin, is that you've built a really resilient team in
Mm.
these last 8 years, a team that really believes in the vision as much as you guys do. And in these last 8 years since Griffin's been incorporated, what's been the most rewarding thing for you?
It can also be more than one thing.
Yes.
If it's hard to choose.
It is hard to choose. I mean, there are a couple things. I think one is like the strength of the bond between Alan and I. Um, One of the main reasons startups fail is because the co-founders fall out. And that's not to say that we haven't had some heated words with each other over the 8 years. But like I feel like so strongly that I chose the right co-founder. And we like a little emotional. We stabilize each other, we complement each other's skills. We're so aligned on like the vision. We have such trust and faith in each other. Yeah, it's really cool. Um, Other things that really matter to me and have are real sources of pride. I mean, just the people, right? Um, I think every time we get together for like an offsite or what have you, it's very powerful to be in a room of people who um are so smart, creative, kind, but also really are part of a team that are building this thing together. Um, and I think related to that is like my incredible pride in um, how some of the people who have been here for a while have like really grown. It's like really cool to um, yeah, like watch someone go from having ownership for some small slice of something to having, really, really big scope and taking on more of a leadership role. Like it's so, so cool um, to watch people like prosper and bloom. And then the last bit, of course, is customers, right? Like there's no feeling in the world that feels as good as like having happy customers.
Yeah, and I think speaking of customers, our customers also a lot, like, we asked them what made you choose Griffin. How do you find working with us? And one of the things I think that's been consistent among all of them, they've said that the people are great, the team is great, and they love our culture, and so it's great. It's great to see that as well. Uh, Sorry, just a little bit of a sidestep. I realized when we were talking about Griffin and how it started, we never really talked about how you and Alan met and how you decided to work together.
Oh, Alan used to be my boss, is the answer. So my first job in Silicon Valley was as a data scientist for an advertising technology company, and this was around the advent of Coursera, and so I'd been hired as an analyst. A friend of mine had said, who was working there, was like, "Hey, we need a guy who knows how to do Excel. Can you do Excel?" And I was like, "Yes." Um, and then I taught myself how to code and transitioned into a data science role. And my friend transitioned first into a data science role, but then into a software engineering role. And he was like, and left the company and did software engineering elsewhere. Another startup, which then failed, and he came back and did some more software engineering, and then our company was acquired. But he was like, "Look, man, I think that like this kind of like is the sorry, someone tried to call me. I think like this is definitely the direction that I want my career to go in. And like, I think you should really consider doing this transition as well." Hat tip, Ben Lindsay, cool guy, starting his own startup, shout out. And so I was like, "Okay." I think I actually said no for a while. And then eventually I came around to his way of thinking. And so when the company was acquired, it was acquired by like a big public company that was clearly like dying. I won't go into it. This is like its own narrative. The company was clearly fucked and was just trying to acquire its way out of its doom spiral. Um, I was like, okay, cool. So I'm not going to stick around for this because you guys are definitely screwed. Um, uh, why don't I go and like apply to like every company on the like Ask HN who's hiring thread. I'll find the ones that are interesting and I'll see, and I'll just, wrote all of them like a very, very honest email where I was like, "Hey, look, like, I'm a self-taught, software engineer. I'm trying to like do this, transition. Would you be willing to hire me and take a chance on me?" And Alan's company, Circle CI, was one of the companies that I talked to. Ironically, actually, so before I interviewed with them, I interviewed with Standard Treasury because I loved like what Dan and Zach were building, and I failed the interview, and they were like, "Yeah, you definitely failed. Like you failed in an incredibly creative way, but you've definitely failed the interview."
What
Uh,
does failing in a creative way mean?
it means that like, so they gave me a problem that was a recursive programming problem, and I didn't realize it was recursive, and I tried like a variety of ways to solve it that were not recursive, but like it had an obvious recursive solution that anyone who knows how these things work should have picked up on immediately. Um, so having done that, I went and interviewed with Circle, and Circle had this really cool thing where they would do like a couple interviews, and then they would say, okay, cool, we're gonna just road test you. So we'll pay you as a contractor for a week. You will come in and work alongside us, and we'll see what you can deliver in a week. And if that works, then we'll hire you full time. So I did that. I shipped their Slack integration, LOL, in a week. And they hired me. And then what happened was 2 months after I was hired, Alan's co-founder, Paul, fired him. And a month after that, he fired me. And so that is how we met, and how we that was our first bonding experience. And as I said before, right, like he's definitely been the right co-founder for me, but a part of having gone through that experience together is that there's like always been an unspoken compact between us, which is like, we're not going to fuck each other over the way Paul fucked you over. And like, yeah, obviously he fucked me over too, but like, I was just an employee, right? I wasn't a co-founder.
Yeah, so I mean, thank you for sharing. I guess now in these last 8 years, what's been the same way that what was the most rewarding? What's maybe been the most challenging few things for you and Alan to have gone through building Griffin?
There have been two. I mean, fundraising is a big one. It really takes a lot out of me. And the reason it takes a lot out, having, just gone through, the roster of examples, is like, yeah, a lot of those are kind of more abstract corporate theses, but a lot of them are really personal, right? It's like, we don't think you can do this. And I'm like, I can do whatever the fuck I want, man. Fuck you. Sorry, that's like very childish, but like, like I don't like being underestimated. On the other hand, like, having a pretty big chip on your shoulder is a great incentive for getting out of bed in the morning. So, but it can be really challenging, right? Like the sort of, I've already alluded to one term sheet getting pulled. We had another thing where someone said, I'm going to get you a term sheet over the weekend, and then did an about face like 48 hours later. And that made me so extremely anxious that I like almost threw up. In general, I have probably vomited like at least once a fundraise as a consequence of the stress of the fundraise. Haven't done it yet for this fundraise, by the way. So it helps that we have very strong growth metrics. And then the other one, and this is it's a tough one to talk about. It's tough, like, legally to talk about it, is not everyone works out as an employee, and a lot of the time when someone doesn't work out, you're able to have like a really open and honest conversation with the two of you about why something hasn't worked, and you're able to agree and exit that is like respectful and sort of everyone's able to be an adult, right? But sometimes that doesn't happen, and sometimes people basically are just like, well, you know what, fuck you, like, I'm gonna get what's mine out of this, and I really want to see people treated fairly, but the UK's employment law environment does make it very easy for malicious people to like consume a lot of resource and also like be pretty nasty in the process. And that sucks. and it sucks partly because like it's just unpleasant to go through, but it also sucks in like a karmic sense because like I can't really talk about the people who behave that way and like make other people aware. This person, like you really don't ever want to have anything to do with this person. Um,
That is hard. And
Yeah.
as one of the interviewers, that's a very hard. I'm glad you didn't. What's the word?
yeah.
You don't have to
Oh,
edit anything.
no editing will be required. No one's been named.
Yeah, in our first episode, having to go against the title. No,
Yeah.
all good, all good.
I know we have to wrap up soon, so I've only got two more questions. The first, as you were saying about fundraising and that being one of the most challenging things, do you think as Griffin grows, does fundraising get easier or harder?
It should get easier. I mean, my hope is like, I mean, if we're lucky, this may be the last fundraise we ever need to do. But even if it's not, it should be easier. And the reason it gets easier is, if you're a seed stage startup, you're competing against 999 other startups, or at least, uh, you have to be 1 in 100. But there's like a winnowing, right? Like only so many seed startups become Series A startups, only so many progress to a Series B, Series C, Series D. And the longer that goes, the fewer of you there are. But there's still, like money and investors out there. And the reason this starts to favor you is two things. First of all, the complexity of the business model begins to matter less. Because it's you don't have to explain the theory. You're just like, look, the revenue number is going up, right? Like that, you know what I mean? You're like, my revenue number is going up like this, and my cost item is going like this. And as they diverge, that's the profit, buddy. Whereas early stage, someone has to really like underwrite on a theoretical basis a lot of risk, and so they have to spend a lot of time. They have to really understand you. So yeah, it definitely does get easier.
And then just last, what do you predict for the future of the fintech industry? So what are your predictions for 2025?
Oh, I don't like doing predictions. I really don't.
We wouldn't be a marketing team if we didn't ask you.
I love reading, just whilst you're thinking, I love reading like, the newspaper FT predictions, and every time they put in like how right they or wrong they were last year, and I don't think it's ever been like, not that I've noticed, it's like 50% wrong at least.
Yeah.
Why are we doing this?
Yeah.
But it's fun to read. Yeah.
Yeah. Yeah. Predictions are hard, especially when they're about the future. Look, part of the problem with you asking this question is I feel tempted to come up with an interesting prediction. And like, I can come up with a lot of predictions, but they're not necessarily going to be interesting predictions, which makes me feel like a little bit like I'm wasting time.
No, it's all good.
Oh.
All good.
I feel like this is a perfect time to enter a video of David on a
I'll include my wish list item. Here's my wish list item. It's not a prediction. It's a wish list item. I wish that we see a consolidation of European Union financial services regulations. I would love to see a like the end of the patchwork of localized implementations and just move to, a true single market for financial services in Europe. That would be cool. And I think there's a bit of pressure and momentum there.
Awesome. Should we wrap it there? Yeah.
Let's do it.
Gives you a bit of time back.
Yeah.
And yeah, okay. I'll stop recording.